Evening. Oh,
It's almost evening here.
okay. Well, getting close. It's pitch black already. So I get how that is. How are you doing?
I'm doing very well. How are you?
Doing well. I'm excited to kick off our interview.
Let's do it.
I need to hear from the expert himself, all things real estate. So I'll give you a softball to begin. Can you walk me through if you had to pick two different, let's say three, top three business learnings from both successes and failures in the real estate realm, what would they be to someone just starting out?
Top three. Okay. Number one is number one and two are going to contradict each other. Number one, you should try as many things as possible to find out what you're good at. And number two would be focus.
Hmm.
So once you figure out what you're good at, focus and get really good at that. Become an expert in what you're good at. Okay.
And at what point do you believe someone in the journey, or maybe even based on your own experience, did you find that inflection point of experimentation, realizing you needed to stick with something and then running full force at it?
It depends on where a person is, how much experience a person has in real estate.
Hmm.
So if you're new to real estate, spend some time trying a whole bunch of different things. Take 6 months, take a year, and just try a few different things and, you know, don't like touch the surface and then be okay with that. Really like try to learn a little bit beyond just the surface level, get a little bit in depth in them. If you like it, continue. If you don't, try to find something else. I mean, it's okay to pivot if you're new and you don't really know what you're good at. Um, that's what I did. I took some time, like the first 6 months, a year, once I joined the sub two community. I just tried a whole bunch of different things. I tried wholesaling, I tried dispositions, I tried um, fix and flips, I did lending. I did a few different things, and I found out what I was good at and what I was not so good at. But I did that like purposely. I wanted to try different things. I wanted to see what I was not comfortable with, get out of my comfort zone a little bit. But once you get a good idea of what you like doing and what you're good at, focus and really start to build out systems and processes, you know, become a subject matter expert in that thing. Now, the third one is make sure you have a good team. Real estate is not so much about that solopreneur thing. You could do it, but it's hard to scale if you're becoming a solopreneur. Like eventually you're going to have to at least hire some VAs or something. You're going to have to offload a little bit of that work. But if you can build a good team and the way I did it, so I spent that first 6 months to a year trying out different things. And part of that was just building relationships and getting to know people and learning what other people did. And so once you get to the point where you're ready to build a team, you kind of have contacts in the field already. And that's how I met my partners, right? It's because we're part of the same communities, we've had a little bit of interaction, or we have mutual friends and acquaintances who they tell us like, you really should talk to that person. You really should be talking to this person. You guys would really hit it off. I mean, that's how Lynn and I contacted each other. So um yeah, try a bunch of different things. Once you figure out what you like to do, focus and then build relationships and have a great team.
Power of loose connections. It gets you
Yes.
far. I agree.
Yeah. Yeah.
And speaking of relationships and kind of being able to deploy that to scale your business, whether it's in real estate or not, how would you guide someone just starting out to find partners with whom they'll work really well and to be able to kind of market yourself in a community to be able to understand your niche?
So it's okay to let people know that you're new.
Mhm.
Sometimes people want to come across as being experts or having a lot of experience, and that could work, but it's okay to let people know, like, I'm brand new at this. I want to try this and see if I can contribute some value here. I'm going to work really hard, whether it's for 3 months or 6 months, whatever it is, so I can provide some value. If this works out, great. If it doesn't work out, that's fine. So that could be a way to kind of get going in that area. And then I think it's important to re-stress that relationship building thing, because you can get yourself inserted into deals and not know a lot. So it's a cool thing about real estate.
I've been there. I couldn't agree more on the power of, and just being able to have trusted people to kind of be in the trenches with,
Yeah,
really bounce ideas off of. Well, that's
yeah.
super helpful. And so now I want to talk about shifting gears a bit to the lending side. I know you're an expert, you and your team experts in kind of the lending side as well, understanding creative finance, seller finance. Talk to me a little bit about the power of relationships and networking when it comes to raising capital so that you can scale your real estate portfolio.
Yeah, so raising capital is all about relationship building, right? So whether that's a relationship that is just starting out, or whether that's a long term relationship that you've had, the more comfortable a person is with you, the better the relationship it is, the more likely that they're going to lend to you. Because in real estate, especially, experience is just as weighty as the relationship, right? So we like to do business with people we've done business with before and with people we like. So, once you do a deal with someone, that not only improves the relationship but also builds credibility with the person. Like, hey, we've done a deal before. I'll just lend it to them again, right? This is the lender's mindset. So, yes, the relationship is super important. Cultivating that, maintaining that relationship, hopefully for the long term, is important. Now, as a person who is raising capital, it's also important to bring deals to the table for those lenders. Otherwise, if you do one deal a year, they're going to forget about you, and that relationship kind of dries up, right? And so you spend a lot of extra time re-warming up the relationship, which is not what you want to be doing if you're trying to raise capital. So if you're trying to raise capital, you need to have deals in order to put that capital into on a routine basis, right? Because you want to keep that money moving for them. You're providing value, right? You're providing value to the lender, and so you get paid by continually providing that value over and over again.
Hmm. And what does value look like to you in a best case scenario when it comes to underwriting and de-risking a potential deal, let's say in the small single family or small multifamily space?
So underwriting, knowing how to underwrite, like being uh, not an expert necessarily, but just about there, is important. You need to know how to underwrite deals. Not only does the deal make sense, but is this actually a deal for a lender to put their capital into, right? So knowing how to look at a deal through various lenses is super important. Um, Underwriting. Now, it's also knowing how to handle that transaction, right? What kind of security instruments do we need in place? What does that timeline look like between when funds are requested, inspection periods, underwriting, appraisals? How long does it take the paperwork to actually be drawn up and put into place? How long is like that whole timeline thing? Knowing the necessary documents in order to protect all the parties is also important. So having a person in your corner who can help you with finding the deal, help you underwrite the deal, manage the whole transaction is super important to lenders, especially if they're newer lenders who haven't done, a significant amount of deals.
Wow. It sounds like, I've heard different terms thrown around. It just depends on what kind of subset in the industry there is, but I've heard a little bit about transaction coordinators, and I know you're pretty well versed in that space too. Can you tell us a little bit about what it really means to be a transaction coordinator and how you and your firm are kind of working toward both the funding side as well as the transaction coordination side to make sure that those deals do in fact go smoothly?
Yeah, so the way we like to think about it or to talk about it is a transaction coordinator, the way we view it is really like a project manager, right? Someone comes in with a new project. In this case, it's a real estate deal of some sort, and they hand it off to us basically, right? They've done the part of negotiating it and getting it under contract, and now it's a live deal. And
Mhm.
now they hand it off to us, to our team, and we pretty much manage that project from contract to close. That's how we like to think about it. So whether it's raising the capital in order to get that deal done, or whether it's knowing the appropriate parties to contact if a particular scenario comes up, right? We deal a lot with the creative type of real estate transactions. So, what happens if there's a foreclosure and we want to take the property subject to, but there's still a little seller financing? That's a pretty complicated type of deal. And so knowing how to handle all those things properly is critical if it's gonna be a good deal. So from contract to closing, whatever happens during that time period, it doesn't matter how simple of a transaction it is, whether it's, a simple wholesale assignment type of deal, or if it's an important deal that is like, um, that creative, multiple issues going on. There's uh, foreclosures, there's a VA loan, there's a seller finance, there's a hybrid of these things. Knowing how to handle all those is really important because they're all different, and you have to know how to structure each of those, not only each of those, but also know how to structure the whole thing together as one deal. And getting that to closing can often be a headache because of all those complications. I call them complications. Just like a watch has multiple complications in it that makes it more complicated, right? Um, that's how a lot of our deals are. They have lots of moving pieces. They're really complicated, and so knowing how to get that to a finished product, to manage that project, is what we're really good at.
But when that watch ticks smoothly, it sure does look good, right? When the deal goes
Yeah,
smoothly.
well, that's the job. Yep, yep,
Interesting.
yep. That's
So it
that's
sounds
exactly
like
the job.
it's really, and there's a premium out there, I think, for these transaction coordinators to be able to project manage, as you say, and not only anticipate, but to remove those obstacles, especially for those who are, they sounds like could be new to the space on entirely, or they could be new to a particular realm within that broader space. And it sounds like as an investor, it would help me more quickly scale because then I don't have to be an expert in any given domain. I can be able to lean on that trusted partner. Is that about
Yeah,
right?
yeah, I think more and more real estate is becoming niched in that there's more specialists coming to the table. Like
Mhm.
for example, we work with wholesalers and investors particularly who usually they're really good at finding a property, negotiating and getting that property under contract. But then there's like all the stuff, paperwork, like I don't want to do the paperwork. I want someone else to do that. And so
Mhm.
now there is someone like that, so they can hand that stuff off, right? And then they're maybe they're not so good at raising capital. They can hand that job over, right? Now, does it split the pie a little bit of what the potential profit is? Yeah. But if all you're, think about it from a wholesaler's point of view, if all I have to do is find a property, negotiate and get it under contract, and I can hand that off, all of a sudden I don't have to worry about those nitty-gritty details. And maybe I'm not good at those nitty-gritty details. I can focus on what I'm really good at. And so maybe now we can talk about scaling and volume, right? If it takes me a month to do a deal, but now all of a sudden I can do two or three or four or more a month because I have all these specialists on my team, and that's what really it is. We're now a team working these deals together, then that's even better for you.
Mhm. Everybody is able to go to their respective interest, and then the sum is greater than, yeah, that makes a lot of sense.
Exactly.
So in terms of the funding side, you threw out some terms that are very interesting. And I love to just dig in a little bit deeper. You mentioned a little while back, you mentioned kind of the sub two community, and then later you mentioned kind of creative finance. I'm definitely familiar with the more legacy side, but can you tell me a little bit more about what does the sub two community really mean? How has it evolved? What is your role in it? And what does creative finance truly mean?
Yeah, so let's start with the latter question. Most real estate deals are what I would call conventional, in that there's a seller who wants to sell their house. They go and they find an agent to represent them. That agent is marketing the property. They put it on the MLS usually, and then a buyer comes along who probably often also has an agent representing them. Those two agents kind of are negotiating on behalf of those two parties. There is usually on the buyer side, they go and get qualified by a bank, they get a bank loan, right? And then they have to put down 5, 10, 20%, whatever it is. Those are more conventional, like how we think more real estate deals are done. Um, However, that is not how the vast majority of real estate is done. The vast majority of real estate is done not using conventional means, right? And this is especially true in the commercial sector. Like in the commercial sector, it's pretty normal to have seller carryback, for example, seller financing, or the seller carry a note, right? They're giving you uh, uh, maybe a second position loan or something like that, right? This is pretty normal in the commercial space, but it does happen, and it has been happening for millennia, honestly, about the seller financing you, providing, giving you a loan and letting you make payments on a monthly basis to them. That's been going on for ages, so it's not anything new. But it comes in cycles, right? The real estate cycles also follow these lean to more conventional, lean to more creative, depending on where we are in the cycle. So creative real estate on the residential side is typically a non-conventional way to buy real estate. We're talking about buying properties subject to, we're talking about lease options, we're talking about seller financing, we're talking about hybrids of those various situations, right? And we're also talking about creative exit strategies. So when we talk about exit strategies, we're not necessarily just buying a house to put it up as a rental. That is one of the things we do, but we also explore other options. For example, assisted living, midterm living, corporate housing, pad split. There's lots of different various ways that you can Airbnb. Like there's so many different ways what you can do with that property, right? And really, the wording is simple. It really depends on your creativity. How creatively can you buy this real estate, and how creatively can you put it to use, highest and best use, right? And so creativity and negotiating skill, because the seller has to agree to it, right? But sometimes, the seller is in a situation where a conventional deal is not good for them, right? Like for example, I'm here in San Antonio, and there's a high population of military people here. Joint Base San Antonio is one of the largest bases in the States, and someone will get stationed here for a year or two. They'll buy a house using a VA loan, which allows them to put some, very little down, 5%, sometimes less. And a year or two after that, they're deployed, or they're restationed, or they're transferred, or something happens, and now they have to sell their house. But because they put such a low down payment, there's very little equity there. And so in order to sell the house, sometimes they need to actually bring cash to the table to sell the house. So they have to pay to sell the house. Well, that's not always a good situation, and sometimes a seller can't do that. And so a creative way for us to step into a situation like that is to be like, hey, how about we just take over payments? Like, we'll just make payments for you. That'll lighten your load, and you can not worry about the house, go do what you have to do, right? So that's just an example of what creative real estate means. Now, Sub 2 is a mentorship slash community that Pace Morby has put on that focuses a lot on creative real estate. So it, it's a networking community and also training, lots of teaching, on a daily basis. There's coaching and teaching that talk about the various ways to negotiate, to approach a deal creatively. Often a deal that doesn't make sense for someone else, we can step into and apply some of our creative brain power to turn into a really great deal. So Sub 2 is a great community. I think it's about 12,000 people now. It's a fairly large community, lots of great resources, lots of great people. The other thing that it's great for is it's a great place to go and get a new mindset built in, right? If you're a small thinking person and you have not been exposed to the vast world of real estate, you're going to be, I like to tell people who are new to the Sub 2 community, like, people say it's like drinking from a fire hose. That is a severe understatement. It's like being dropped in the middle of the Atlantic and being told, like, swim back, we'll see you, because that's typically what happens. Like, you'll drown for 3 months because there's such a volume of information, and then you'll resurface and be like, okay, I think I can breathe now. Let me get started figuring something out.
But you have
Uh,
little buoys of new friendships along the way to try to
yes,
propel you to shore. I couldn't agree more.
exactly. Yeah, so I've really enjoyed Sub 2. I joined about a year ago. I mean, honestly, it's changed my life, changed everything about, you know, every day. Like every day I do, I'm different than what I was prior to Sub 2. Part of that is mindset, part of that is growth in business, learning, partnerships, like all that stuff has come about because of Sub 2. Some great friends that I made in Sub 2. Lots of opportunity there for sure.
Agree. Yeah, it's a absolutely wonderful community in all its component parts. I mean, it could be Sub 2, it could be Gator, which is more in the lending play. There's so many, I think that Pace has been able to craft and really champion in the past few months and years. In terms of going back to kind of the Gator or the lending side, I'm curious if an investor wanted to come to you and your team, what services would you be able to offer them and kind of what kind of value would they be able to look to you for?
Yeah, so we, uh, our business is simply, if we think about it in a simple way, we're really connectors. So we connect people who need capital, we connect them to capital. And so we're doing real estate, right? We do have products for business acquisitions and startups and that sort of stuff for sure. But the vast majority of what we're doing is real estate. So we do a lot. We have several components. We do a lot of the hard money type of stuff, rental loans, DSCRs, portfolio loans, fix and flips, ground up construction, bridge loans for commercial properties, like all the standard hard money stuff. We do that. We also do transactional type of lending, which is things like earnest money deposits, double closings, um, Morby methods, those types of more creative ways to do funding. And then we also have a niche where we also do private money. Now, private money is super complicated. It's a big project and there's a lot of components to it. But we will, on occasion, depending on deal, like this is where the whole underwriting and deal structuring thing really comes into play, is because those are not typically institutional type of deals, right? It's not institutional money. We're typically raising money from individuals and who are interested in lending. And so when we bring those individuals deal, we take an extra amount of due diligence to make sure, because typically when someone's coming to us asking for private money is because they need private money and they can't get hard money, they can't get more traditional, more hard, whatever it is, institutional type of money. Maybe they don't qualify, maybe it's an interesting, whatever it is, there's so many factors and variables that it's hard to like pin down one thing. But usually, especially if it's, for example, a second position loan, if someone is needing a second position loan, the vast majority of hard money is not going to do that. You're going to have to get a private money lender to do that type of deal. And so where we do that, we do a lot of those kinds of deals. Just realize there's going to be a little bit of extra vetting, which it's understandable, right? They're riskier deals. We're going to take our time on those, make sure everything is buttoned up real tight.
Got it. Well, wow, that's quite the suite. That sounds like, anyone trying to invest in the space. And I love that it's not just it's a focus point is what it sounds like in real estate, but it's not necessarily. It sounds like it can extend to business capital as well. And I think that is such a pain point in this day and age, especially with, impending market trends. I think a lot of people can get a bit more fearful, but being able to raise that capital is, I believe, an increasingly important skill set. And it sounds like your team can do that.
Yeah.
So I'm going to end with a lightning round. So
Oh
just
boy.
bear with me on these. It'll just be a few, I promise.
No
Uh,
problem.
just either or one word answers. Are you ready?
Yep.
All right, let's do it. Single or multi?
Multi.
Private or hard money lender?
Oh, that's a tough one. Um, if you can do hard money is always better.
Fair enough. Touche. I agree. Transactional lending or a joint venture?
Mm, transactional lending.
I like it. And last but not least, to round us out, the infamous Rich Dad, Poor Dad book or Wealth Without Cash to kick you off in your career.
To kick you off in your career, neither. This one.
Oh, you know what? Funny enough, we have not talked about this. That was mine
Think and
too.
Grow Rich.
Couldn't agree more.
Better than both of those.
Love
Wealth
it.
Without Cash is good. I'm not going to lie. Wealth Without Cash is good. But I think Pace would point to this one too. Yeah.
Hey, it's not zero sum on that one. They're all fantastic books, and that was a beach read for me that kicked off this relationship too. Well, thank you so much, Rob. I really appreciate it. I've learned a lot, and eager to hear more and see how the company grows.
Sounds great. Thanks, Brooke. Appreciate it.
Thank you.